The crypto market is in turmoil. Over $100 billion wiped out. Bitcoin at a critical juncture. Solana, Memecoins under fire. And investors are left wondering, what's next? Is this the end of crypto or just another bump in the road? Look, I get it. Seeing your portfolio in the red is never fun. It can be scary, especially with all the doom and gloom headlines out there. But as someone who's been in the real estate game for years, and now in crypto, let me tell you this. Panic is never the answer. Today we're breaking down the chaos, explaining what's driving the market, and most importantly, how you can navigate the fear and greed of crypto investing. Let's dive in. The crypto market thrives on confidence, and right now, confidence is shaky. Think about it. With inflation still high, interest rates going through the roof, and the economy teetering on the edge of a recession, investors are getting spooked. They're pulling out of risky assets like crypto and looking for safer places to park their money. I mean, who can blame them? When the world feels uncertain, it's natural to want to play it safe. And it's not just the average Joe on the street. Big institutional investors, the whales of the financial world, are also hitting the brakes on crypto. They're worried about regulation, they're worried about volatility, and they're worried about the overall uncertainty in the market. This lack of confidence has a ripple effect. When big players start selling, it creates a domino effect. Smaller investors see the prices dropping and they panic, selling their holdings and driving the prices down even further. It becomes a self-fulfilling prophecy, a downward spiral of fear and uncertainty. But here's the thing about fear. It's contagious, but so is opportunity. Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." And right now, there's a lot of fear in the crypto market. But does that mean it's time to buy? Not so fast. We need to understand the factors driving this uncertainty, and that's what we'll be diving into in this video. Remember, knowledge is power. The more you understand about what's happening in the market, the better equipped you'll be to make smart decisions. So, stick with me, and let's break down the crypto chaos together. Let's talk about the elephant in the room, the Federal Reserve. Their policies have a huge impact on the economy, and right now they're in inflation-fighting mode. How are they doing that? By raising interest rates. See, higher interest rates make it more expensive to borrow money. This slows down spending and in theory cools down inflation. But there's a flip side. When interest rates rise, investors can earn a decent return by parking their money in less risky assets like bonds. They don't need to chase the high-risk, high-reward potential of crypto. Think of it like this. You have $10,000 to invest. Would you rather put it in a savings account that's now offering you a 5% return with almost zero risk? Or would you gamble it on a volatile asset like Bitcoin that could go up 20% or crash another 20%? For many investors, the answer is clear. They're moving to safer ground. And it's not just the US Federal Reserve. Central banks around the world are following suit, raising interest rates to combat inflation. This global tightening of monetary policy is creating headwinds for risk assets like crypto. So what does this mean for you? It means we need to be realistic. Don't expect the Fed to pivot and start cutting rates anytime soon. Inflation is still a major concern, and they've signaled that they're willing to keep rates higher for longer to get it under control. This means the crypto market will likely remain volatile in the short term. But remember, short-term fluctuations are just noise. The real question is, do you believe in the long-term potential of crypto? If so, then don't let the Fed's actions scare you away from your investment thesis. Let's be real, the world feels pretty unstable right now. We've got wars, rumors of wars, trade disputes, and political instability in many parts of the globe. And guess what? Uncertainty is like kryptonite to the crypto market. When the world feels like it's on edge, investors tend to flock to safe haven assets like gold or US Treasury bonds. These are seen as stores of value that hold up well during times of turmoil. Crypto, on the other hand, is still considered a relatively new and unproven asset class. It's volatile, it's unregulated, and its future is still uncertain. So, when geopolitical tensions flare up, it's natural for some investors to reduce their exposure to crypto. They'd rather wait on the sidelines and see how things play out before jumping back in. But here's the thing, geopolitical uncertainty is, unfortunately, a part of life. There will always be something happening in the world that could spook the markets. The key is to not let these short-term events derail your long-term investment strategy. Remember, the crypto market is still in its early stages of development. It's volatile by nature, and it will continue to be influenced by global events. But if you believe in the underlying technology and the potential it holds, then don't let the headlines scare you away. Now let's address the elephant in the room, the recent Bybit hack. This wasn't just some small-time operation. It shook the entire crypto community and reminded everyone about the risks involved. You see, trust is the foundation of the entire crypto ecosystem. When a major exchange like Bybit gets hacked, it makes people question the security of the entire system. It's like finding out your bank got robbed. Suddenly you're not so sure about keeping your money there anymore. Hacking incidents like this have a ripple effect. They erode confidence, lead to stricter regulations, and can even scare away potential investors who were just starting to dip their toes into the crypto waters. But here's the thing. Just like any other industry, the crypto world has its bad actors. There will always be people trying to exploit vulnerabilities for their own gain. The key is to learn from these events and make the system more secure. After any major hack, exchanges typically double down on their security measures. They implement more robust protocols, enhance their KYC, Know Your Customer procedures, and invest heavily in cybersecurity to prevent future attacks. So, what does this mean for you? It means you need to be vigilant. Choose reputable exchanges with a proven track record of security. Enable two-factor authentication on all your accounts, and never ever store your crypto on an exchange for longer than you need to. Remember, your security is your responsibility. Now let's talk about the big dog Bitcoin. Analysts are saying it's at a make-or-break point. If it drops below a certain price level, what we call a support level, we could see a massive sell-off. It's like a game of Jenga. Remove the wrong block, and the whole tower could come crashing down. But here's the thing. Bitcoin has been here before, and it's always bounced back. Remember 2018? The crypto winter? People were saying Bitcoin was dead, that it was going to zero. But guess what? It survived, and then it thrived. Same story in 2020 when the pandemic hit, the market crashed, Bitcoin plummeted, and everyone panicked. But again, it recovered, and then some. So what's the lesson here? Bitcoin is resilient. It's been through multiple boom and bust cycles, and it's still standing. But here's the catch: past performance is not indicative of future results. Just because Bitcoin has recovered before doesn't guarantee it will recover this time. The market is constantly evolving and new challenges are always emerging. So, what should you do? Well, first of all, don't panic. Don't make any rash decisions based on fear or emotion. Remember, you invest for the long term. Second, do your own research. Don't just listen to what some random YouTuber, even me, is saying. Look at the data, understand the fundamentals, and make informed decisions. The crypto market is volatile, and right now it's going through a tough phase. But remember, every crash is followed by a recovery. The key is to stay informed, stay calm, and stick to your strategy. Don't let the fear and greed of the market dictate your actions. Remember, the best investors are the ones who can control their emotions and make rational decisions, even when everyone else is losing their minds. So take a deep breath, tune out the noise, and focus on the long term. So what do you think? Are you buying the dip or waiting for more clarity? Let me know in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss out on more crypto insights. Thanks for watching, and I'll see you in the next one.